Listen to this. Right now in America, nearly a quarter of all mortgages are locked in above 6%. That's the highest level in more than 12 years. At the same time, millions of homeowners are sitting pretty with rates below 3%. That gap is creating one of the biggest divides in housing and finance we've ever seen. But here's the kicker. While the housing market struggles under the weight of rising rates, Bitcoin keeps proving why it's the one asset that refuses to be tamed. If you want to know where the cracks are forming in traditional finance and why Bitcoin stands to benefit, stay locked in. What's up, family? It's Coach Massey, and you're locked into the Daily Hodl, your source for Bitcoin and financial news. And I'm so happy you're here to watch. I'm about to give you clarity, energy, and perspective. As always, this is not financial advice, just education to help you stay sharp. Let's start with the big headline. 22% of mortgages in the U.S. now carry interest rates higher than 6%. That's the highest percentage we've seen in over a decade. Think about that. More than 1 in 5 homeowners are paying interest rates that eat up massive chunks of their monthly budgets. That's scary. That's wild. And that's the current event. Now compare that to the other side of the spectrum. Around 30% of mortgages, well, they're sitting between 3 and 4%. And about 23% of those are below 3%, like mine, which is the lowest percentage since 2021. I love that. But what does that mean? Well, we're living in a split housing economy. On one side, you've got homeowners who are locked in to historic rates and are never selling unless absolutely have to. On the other side, you've got people stuck with higher rates, struggling to keep up, and potentially at risk if the economy slows down. Scary stuff. This gridlock, though, it means fewer home sales, higher prices for buyers, and less mobility for families. And the financial squeeze has ripple effects everywhere. Consumer spending, credit card debt, and yes, even investor appetite for risk assets has changed. Now, why does this matter for you or for Bitcoin? Well, because when traditional markets get tight, when real estate feels like a trap, and when cash flow gets squeezed, investors start looking for asymmetric opportunities. You see, Bitcoin continues to stand out as an alternative, an asset outside the system, one that isn't tied to the Fed policy in the same way mortgages are. Housing is stuck, Bitcoin is moving. Now, let's talk about one of the biggest Bitcoin stories of the fall, MicroStrategy. We are just days away from closing out Q3. And depending on where Bitcoin is sitting when the report of earnings comes out, this could be a huge deal. Here's why. If MSTR, also known as Strategy or formerly known as MicroStrategy, posts another positive quarter, it strengthens their case for S&P 500 inclusion. Remember, they already tried once earlier this year and didn't make it. But with Bitcoin's performance and MicroStrategy's relentless strategy of stacking sats, December could be their moment. I'm really hoping it is. Think about what that means, though. A Bitcoin-heavy treasury company entering the S&P 500. Every single index fund, retirement plan, and pension tied to that index would suddenly have exposure to Bitcoin through MSTR. That's not just validation. That's institutional adoption on autopilot. I love that. So as you watch Bitcoin price levels this week, remember it's not just about the charts, it's about what those numbers mean for companies like MicroStrategy and how that ripples into the broader financial system. You see, Bitcoin doesn't need permission, but every time Wall Street validates it, the case for adoption gets stronger. So let's zoom out and look at the week ahead. Because family, this is one of those weeks where the macro calendar is absolutely stacked. Every single data release on this schedule has the power to shift markets, and I think it will. We're talking stocks, bonds, housing, and yes, Bitcoin. Let's break it down. Tuesday kicks things off with the JOLTS report, or JOLTS job openings, and then we have consumer confidence as well, where they give you, their confidence. That data is also on Tuesday. The JOLTS report tells us how many job openings are out there in the economy. If openings shrink, it means employers are pulling back on hiring. Pair that with weaker consumer confidence, and suddenly the picture looks like an economy cooling down. For Bitcoin, weaker data has been a double-edged sword. Sometimes it sparks risk-off moves as investors flee into cash. Other times, it boosts Bitcoin's case as a hedge against weakening fiat systems. The key is not just the number, but the narrative Wall Street spins out of it. So, Wednesday is big too. We'll see the ADP non-farm employment report, or payrolls, and the ISM manufacturing PMI. The ADP data, well, it gives us a private sector preview of how many jobs were added in September, ahead of the official government report later in the week. Meanwhile, PMI tells us whether U.S. manufacturing is expanding or contracting. If PMI drops into contraction territory, it's a flashing warning sign that industrial activity is slowing. That's when the conversation shifts. Will the Fed really stay aggressive or will they blink? And every time the Fed shows hesitation, Bitcoin shines as a hedge. And we know that some of those Fed chair presidents, they're divided. Thursday brings initial jobless claims, one of the fastest real-time indicators of the labor market. If claims rise sharply, that means more Americans are losing jobs, and stress in the system is building. That's when people begin asking the tough questions about where to protect their wealth. Do they keep trusting the dollar in a weakening economy, or do they start looking at assets outside the traditional system? That's where Bitcoin starts to enter the conversation, even for the skeptics. And then Friday, well, the main event, the September jobs report. This is the Fed's favorite labor market gauge, the number one data point Jerome Powell and the FOMC track when setting policy. If job growth slows, if unemployment ticks up, if wage pressures ease, markets will immediately start pricing in a shift toward future rate cuts or at least a pause. And here's the connection. When the Fed signals easier liquidity, risk assets tend to rally. But Bitcoin isn't just another risk asset. It thrives in volatility. It feeds on uncertainty. And it often runs in the opposite direction of traditional expectations. That's why we're looking this week. And that's why you're going to watch this Daily Hodl every day. So does all of this matter for Bitcoin? Well, it does. And I'll tell you why. Because every single data point this week is tied to one thing, liquidity. Liquidity is the fuel that drives financial markets. More liquidity in easier conditions, well, stocks rally, bonds breathe, and Bitcoin has the chance to go parabolic. Tighter liquidity and more pressure, well, traditional assets struggle, but Bitcoin continues to prove that it can exist outside the Fed's control. That's why I love Bitcoin. Family, the connection is crystal clear. The housing market is gridlocked, inflation remains sticky, jobs data is giving us mixed signals, and institutions are lining up for the next leg in Bitcoin's adoption story in Q4. This week's data doesn't just tell us about the economy. It sets the tone for Bitcoin's role in the global financial system moving forward. While Wall Street watches what the jobs numbers are, Bitcoin is quietly grinding toward its role as the hardest, most resilient asset on the planet. So, let's wrap this up. Housing is under pressure with 22% of mortgages above 6%, creating financial stress we haven't seen in 12 years. At the same time, MicroStrategy is positioning itself for another S&P 500 attempt, a move that could force mainstream adoption of Bitcoin through index funds. And this week's economic data dump will tell us how strong or fragile the U.S. economy really is heading into Q4. Through it all, Bitcoin keeps doing what Bitcoin does best, proving itself as an independent, resilient, global store of value, digital gold. Whether you're a trader or a hodler, the message is simple. Stay sharp, stay disciplined, and keep your eyes on the bigger picture. Now I want to hear from you, family. Do you think rising mortgage rates will push more people toward Bitcoin as an alternative asset? And what's your take on MicroStrategy? Will they finally break into the S&P 500 this December? Drop your thoughts in the comments. I read every single one of them, and I look forward to reading yours. Now, don't forget to like this video, hit subscribe, and share with anyone who loves Bitcoin news. It helps the channel grow and keeps this community strong. And that's my goal for every one of us. Get off zero and get in the game. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.